He's the CEO of Prosper Trading Academy, and he's at the SIBO. Scott, Boeing, we talked yesterday, the chartists will tell you the thing is holding up pretty well around a long-term moving average. The fundamental guys might tell you to steer clear because there's still a lot to be figured out here. What do you think?
It's definitely a mix of that, Oliver. And what I'm looking at right here from a trader's perspective, and we always talk about this, right? I'm looking at a trade. I'm not looking at an investment. I'm looking at a trade. And I agree from the technical side of things that the stock is holding up pretty well here. And so what I'm looking to do, because there is some extended implied volatility, extended premium in the options, I actually want to do something that gives me a range-bound type of setup going out just to next week, to a week from tomorrow. So that's called an iron condor. And what that is selling a put spread and selling a call spread. So basically you're looking for a range-bound move. Now, the expected move that the option market right here is pricing in Boeing going out to next week is about $15.
Okay.
Now that's not directional. That is just $15 one way or the other. But I like the fact that Boeing has held in here. So what I'm doing is I'm actually selling the at-the-money put spread. So the 375, 370 strike put spread, which is right at the money here. And then I'm also going to sell an upside call spread, the 395, 400 call spread, because I personally think, unless, God forbid, something more catastrophic comes out, more news comes out, I think Boeing hangs in here. I'm selling both of those for next week. I'm going to collect over $2, somewhere around $2.25 or so. The max value of this spread, regardless of what happens to Boeing, whether the stock goes to 0 or 1,000, the max value is $5. I'm able to collect a lot of premium to look for that little bit of a range-bound, slightly bullish event or trade in Boeing out to next week.
So Scott, the use of selling two spreads then instead of just a single contract on one higher, one lower, is that to enhance the premium that you're getting basically?
So yes, one by selling both the put and the call spread, Oliver, I do collect more premium. The reason I'm doing them both as spreads as opposed to just selling a put on the downside and a call on the upside is because I also want to limit my risk, right? Like I mentioned before, no matter what happens to the stock, whether it goes to 0 or 1,000, the maximum value of this spread is $5. If I were just to sell a naked put and a naked call, I have unlimited exposure. Well, at least to the downside, that exposure is down to 0. Theoretically, on the upside, that exposure is unlimited. So I want to cap my risk a little bit, but I also want to take advantage of the extended premium that's out there in the market right now.
Yeah. Hey, Scott, word on the street is you got Biogen on your mind as well. Stock's getting hammered this morning.
I did.
As they abandoned the Alzheimer's trial. So tell me what you're looking at here.
I came in this morning actually looking to possibly sell a put spread here, but when I look at, quite frankly, the lack of open interest and the lack of volume out there, that kind of dissuaded me against that because the markets are very, very wide. Now, that being said, Oliver, if I were to do something, I'd probably sell a put spread just below the market here. I look at this and yes, this is a major, major blow to the company here. But if you look at the valuation of the company, excluding this potential Alzheimer's drug, that's about where the stock is trading, let's call it fair value right now. So again, I would want to take advantage of the absolute extended volatility, extended premium here, but I would only do it by selling a put spread, therefore limiting my risk.
Yeah. All right, great perspective forward here.
Can I say one other thing?
Yeah, go for it, Scott.
Can I say one other thing about Biogen and the market? Looking this morning, it's always nice to know when you see a huge move in a stock like this, based on some kind of news, it's always nice to know that the market did not know about it beforehand. What I mean by that is, if you look at the volume, the option volume yesterday, nothing out of the ordinary. About 1,400 options traded. There was no extended put volume. So this is not something that, potentially had leaked out to people ahead of time. And you always want to look at that because it gives you confidence in the markets.
Yeah, all right. I like that, Scott. Good touch, because I've seen some of those trades before. I used to write about them at my old gig. Sometimes you get a big announcement.
Exactly.
All of a sudden, things get a little active the day before. All right, Mr. Bauer, 2 for the price of 1 today, BIIB and BA. Scott's the CEO of Prosper Trading Academy.